Trading positions, here we see this is an amalgam of not only retail investors but to banks and other institutions who should know what they're doing sometimes. So they're long of euro dollar cable and dollar yen, which seems to be intuitive and doesn't sound too painful. Short of dollar Swiss and dollar Canadian, which I suppose being short of dollar Canadian in recent past has been not a bad idea.
No. Certainly not, and the Bank of Canada delivering where others haven't actually delivered anything yet, and that's probably the thing which gives it support. In addition to the fact that obviously if oil prices were to recover a little bit further, then that would be also supportive, as well as the good news on the economy and the tighter Bank of Canada policy.
So while we were complaining about lack of movement, there was certainly enough for everyone the other day, a couple of days ago.
Yes, when the Bank of Canada did actually deliver on its rate hike. I was actually surprised by the scale of that move, given that the tightening move had been really very well signalled. So it looks like in the first instance, someone obviously placed some quite tight stops, and someone went after it. The stop hunters went after them to see how far they could pressure them. Obviously quite far.
That was quite nasty. And then going back to, we got short of the Aussie dollar, which seems to be could be a bit painful now.
Yes, I think here the key factor is as much as the Reserve Bank of Australia doesn't sound like it's joining in with everybody else, in this risk-on environment and with recovery in some of the industrial metals and oil, there is this carry into Australia, even though their rates aren't particularly high by historical standards, which very much attracts people.
It's been a very beautiful move to the upside there.
Absolutely, yeah.
Then finally, euro sterling, where people are long. Presumably, they were long into the Bank of England, Mr. Broadbent's help for the cross, but obviously we have pulled back since then, haven't we?
We certainly have, and I still think we're probably in a fairly tight range for the moment, depending on how what sort of divergences are we going to get between Bank of England and ECB policy. Is the Bank of England really going to be that much further ahead of the ECB, or, as the market's currently discounting, is it really only going to be probably tightening policy at the same time as the ECB? It's a big question.
That magic number 88 pence
at
the moment.